Hey traders, in this video I'm going to show you a simple but powerful 5-minute scalping strategy that even beginners can use to catch consistent moves in the market. Stay tuned till the end because I will also share my best tips to avoid common beginner mistakes. Okay, so now this is our chart for USD JPY. So now it works. This strategy works on major pairs like Euro USD, GBP USD, or USD JPY because they have tight spreads and good volatility. Okay, so now this is how we add our indicators on the chart that we are going to use to scalp on our 5-minute time frame. Okay, so now you come right here, you tap here, then after tapping there you go to indicators right here. Okay, then after going to indicators you go to technicals right here. Then you can search your moving average. Okay, so now, but you can also search it from right here. Then you go to moving average exponential, you tap it. Okay, and you tap also another one because you want to add two moving averages. Okay, so now you go back to your chart and set them very well. So now on setting them, you tap on the first moving average up there, you go to settings. Then what we shall do, we shall set this one as our 50 length, as our 50 exponential moving average. Okay, so now you can set it as 50 right there. Then for the style you can leave it as blue, the color. Then you say okay. Then you go to the second moving average settings. Then this one you will just set it as a length of 200 exponential moving average. Okay, you can decide to change the color to so that it doesn't match with the other one, but also don't choose red or green because they are used in the candlesticks. So let's choose black here and we see whether it will go. Okay, so I think it is now fine. Okay, so now the blue one, it is a 50 exponential moving average, and the 200 exponential moving average is a black one. So now we have set our indicators on the chart. Okay, so now next is the entry rules. Okay, so now here how we take entries. So now if a 50 exponential moving average is above 200 exponential moving average, we only look for buying opportunities. Okay, so now for example right here you see this. So now when you look at this, so when you look at this, this was a 200 exponential moving average, and this one here it was a 50. So now a 50 exponential moving average is above a 200 exponential moving average. So that means here we shall look for buying opportunities. Okay, and also if a 50 exponential moving average is below the 200 exponential moving average, we always look for selling opportunities. For example, here you can see that a 50 exponential moving average was below, this is a 50 was below the 200 exponential moving average. So here you look for selling opportunities, guys. Okay, you can see when it is below this exponential moving average. Okay, so look for selling opportunity. Now to time our entries, always we shall wait for a pullback candle that touches or comes close to the 50 exponential moving average. Okay, so now one price candle that touches or comes close to the 50 exponential moving average, one price rejects from that area. So now always the price will try to reject from that area. Okay, you enter in the direction of the trend. Okay, so now let's see here. Number 3 is to utilize your stop loss and the take profit. Okay, so now always you protect your capital. You place your stop loss just below the pullback. Okay, and also just below the pullback candle for buys, or just above for sells. Okay, so now for take profit, aim for 1 to 2 risk to reward ratio. That means if your stop loss is 10 pips, you go for at least 20 pips profit. Okay, so now let's see some examples for the let's do what. So let's summarize everything with the examples. Okay, so now for the first example, let's take a selling trade. Okay, so let's take a selling opportunity, guys. Okay, so now we said, so for us to sell, a 50 exponential moving average has to be below a 200 exponential moving average. Okay, so now when you see here, so this was a 50 exponential moving average. It was above our 200. So now we said if we identify that, now we always look for selling opportunity. So now we shall wait for the pullback candle to touch our 50 or to come close our 50 exponential moving average. Okay, so now like here, so now when you see right here, it came close this So now it came close, or this is a pullback candle. So now you can see when it came close to these moving averages, it showed to us the rejection. We said that for us to enter, we always have to see the rejection of these moving averages, as you can see here. So now we said here you just enter your selling opportunity. So just enter your selling trade. Okay, so now you put your stop loss somewhere, just that this one was a risky trade. Then you put your TP somewhere. Okay, so now that was a very good scalping trade. Okay, so now another one, it is right here. So now you can see this was a 50 exponential moving average. It was below a 200. Okay, so now we said when it comes close to this moving average, we always take a selling opportunity because it is below the 200. Okay, so now that's why when it came and made this rejection. Okay, so now you can see it was moving below, then it came and rejected. Okay, it came and rejected here. So now this was a scalping technique. So now here you always at least risk 10 pips and you aim for 20. Okay, a 1 to 2 is already enough. Okay, so now also here you can see it was moving, then it came and rejected our moving average here because it is moving below 200. So now it is a selling opportunity. You can see here how it moved. So now let's see an example of a buying opportunity, guys. We said a buying opportunity, a 50 exponential moving average has to be above 200 exponential moving average. So now, for example, let's see here, guys. Okay, you can see this was a 50. This blue one, it was a 50. It was above this. It was above this this black one, which is a 200. Okay, showing to us that we have to look for buying opportunity, and for us to buy, always the candle or the pullback has to come back to the 50 exponential moving average close, or it touches it. Okay, so now you can see right here, this was a very good trade. Why? Because now it came and touched this. It came and touched this moving average. Can you see that? So also here it came and rejected here. So now all those were opportunities. So now the first one, here we had to take a long position after coming close to our moving average and rejecting it. Okay, so now you enter from there. Here you can risk 10 pips to here when you are targeting almost 30 pips. A 1 to 3 is really a good trade. So also another example here, you can see that you came and rejected your moving average. So here also you can risk your 15 pips, aiming for almost 1 to 5 trade. Okay, so now buying opportunity is really good when you identify that is above. So you always have to take the trades. Okay, so now there are some pro tips and warnings that I should talk about. Okay, so now the first one is don't over trade. Just because you are scalping doesn't mean you should take 20 trades a day. Always stick to quality setups and always test this strategy on a demo before going live. Okay, so now if you found this video helpful, smash that like button, subscribe for more beginner friendly forex strategies, and drop a comment if you want me to share my advanced scalping tips. Thanks for watching and happy trading.